Hello
Okay.
everyone, we've got Cydney O'Sullivan with us today. I met Cydney at a conference and she was just this fascinating person because she had so many stories and experiences from her business life. And I just thought I've got to get her and ask her some questions, and maybe other people might be as interested. Cydney is a person who has run up and made so much money and then unfortunately lost it, but then made it again and just gone through that cycle so many times. It's just crazy. And her stories are fascinating. So, Cydney, thanks for coming.
Thank you. So nice to see you again, Adam.
So we spoke before, and you were telling me a little bit about your life and how you started out. Would you mind just telling us again?
So I hate to start with, when I was a child, but it's actually I've just had an amazing life. So I will start with the fact that I was born in America because people always want to know about my accent. So I was born in California. And then my dad was my mom and dad were very young. My dad had skills that made him move over to Hong Kong. It was a big manufacturing place then, and the gateway to China. So there were all these businesses that were doing their manufacturing for the whole world, and most of the transactions and commercial things for people wanting to do business with the Chinese were coming through Hong Kong. So it was an incredibly wealthy, tiny little island, very wealthy. And my dad ended up leaving us there when we were very young, and he went on to move to Taiwan to work. But my mom decided to stay in Hong Kong. So she had to work three jobs. And I was kind of raised by, we had a young girl who was a maid, as you do in Hong Kong. And then a lot of the time we would go and hang out with the girls who had shops in the apartment building where we worked, my brother and I. And so I got this love of retail. I really loved hanging out in the shops with the girls. And so all my life, my mom actually worked in a diamond shop. So that was her day job. And then at night, she was a public speaker. And funnily enough, which I'm now a public speaker. So, a lot of this stuff
Hmm.
is imprinted on you when you're very young. And so I would hang around her diamond shop after school and, of course, look at all the beautiful diamonds. And she was just, she was the manager there, but they weren't her diamonds. But, I got to play with them. And so I've always had this love of selling things, and especially expensive things. And I probably learned a bit about sales from my mum because she was talking to people about their engagement rings, which everybody knows is, a hugely emotional purchase. So lots of profit in engagement rings. And anyway, so then when I was a teenager, my parents would always talk to me about how you had to get a job. But I used to see a lot of my stepfather, my mom remarried. My dad was in the Hong Kong government. So a lot of the people that he worked with in the government left the government, the safe jobs, and became entrepreneurs. So let's just say they'd been working in the media governance, area, which is where my dad worked. They might go on to be in public relations and charge top dollar, right? So I'm seeing these people become wealthy. And although we had a wealthy lifestyle and I went to a good school, we didn't have a lot of cash, because it was just, he was a government
Hmm.
employee. And so I was always thinking I'd like to have my own business. And my parents were always saying, no, you just got to get a job. And funnily enough, at school, when I did the careers testing, I was always good at writing. And my teachers told me that I would make a good barrister or lawyer. But my
Okay.
parents were of the old school, and they were like, no, just you're just going to get married and have babies. What do you need to go to university for? So I ended up leaving high school, and we ended up moving to America. And I lived there for a few years and worked for, funnily enough, small companies who were growing fast. So I was around entrepreneurs
Hmm.
and a lot of guys in the tech industry. So I worked in a lot of these small tech companies who ended up like, we're talking the 80s here. So they were doing these penny floats, and then they would end up being acquired by bigger companies. So I was seeing this sort of stuff, and it's all going in. And then I just really wanted to have a different life. I was in America. I had missed the multicultural environment of Hong Kong, and I ended up coming on a holiday to Australia, and I just fell in love with the place because it's really in the 80s it was just the land of opportunity. There was so many business opportunities. It had the wonderful multiculturalism that I'd grown up with.
Hmm.
And really there was, if you were willing to give people good customer service, you couldn't go wrong in Australia at that time. There was just so much opportunity. So I ended up meeting a lovely man, and he and I got married, and he was the first person to ever really believe in me and say, I'll back you. He was it's like you, Adam. He had a commerce law background. He was working in a corporate world, so he was doing contracts for a big corporation, paying top level of tax. And he said, look, if you want to start a business and you don't bankrupt us, then we can actually deduct most of it against my tax anyway. So let's give it a go. So for the first time, and my idea for my first small business was something they were doing in the States and they weren't doing here in Australia, which was lunch deliveries to areas that weren't near restaurants. And if you think we now have the food trucks and stuff, or now we have Uber Eats and everything, right? So
Hmm.
again, this was the 80s, and I wanted to do that. So I ended up finding a place for sale that was in the Chatswood area. For anybody who knows Sydney, it was in the Chatswood area, and it was an industrial area, and they didn't have many restaurants. And there was this little restaurant for sale in the newspaper that was really, they were desperate. They had no retail trade at all, because it was one of those shopping centers on the main road, thousands of cars driving past, but really nowhere to pull over and
Hmm.
stop. And too close to a major shopping center in Chatswood, so most people would go there. And these people wanted about $15,000 for the shop, but it was fully stocked. It had a huge cool room, and it had been a bacon and ham shop, so it had a huge bacon slicer and all this amazing equipment.
Hmm.
And my husband came up with the idea of selling all the equipment in the shop, and we were able to sell that for 20,000 to a leasing company, and then we leased it back.
Hmm.
So they gave us 20,000 cash to start the business. We ended up negotiating, we bought the business for 10,000.
Hmm.
And of course, all the other local shopkeepers all said to me, you could have got it for less, right? But it was my first one.
But still
And
amazing result. You paid 10,000 and then you immediately sold the assets for 20,000. I was saying to you before that you're like a corporate raider. That's what they used to do. They make money from doing that. That's an incredible transaction to start off with.
it was great because we had very low risk. And because I hadn't intended to run the business the same way as had been run, I wasn't really relying on people walking in the shop, because I was going to deliver food to the local industrial area.
Hmm.
It didn't really matter to me if people came to the shop. But what happened was a lady came in. I went in, cleaned it up, and fixed up the business, put under new management. And a lady came in and asked if we would cater her party. And I realized there was a huge opportunity. I was thinking, if they can't come to us, we can go to them. And
Hmm.
and it was a rich area. So I had a signwriter come in, and we painted catering and our phone number across the front of the shop. And I took, we had old rusted ice cream signs, the old streets ice cream signs
Hmm.
that have been on there for years, and we weren't getting any revenue for that. So I just bought a tin of blackboard paint and painted them all as blackboards, and then started, writing messages on the signs outside the shop, um, and it started working. People started coming in, and we started attracting a lot of tradesmen. Actually, there's tradesmen are really good eaters. They would come in
Hmm.
and buy big. They'd buy for the whole team if they were doing a renovation. And I ended up hiring in some cute young girls, and then we got more tradesmen, and the girls were good workers. And I ended up sending one of my gorgeous girls down to the industrial center every day with baskets of sandwiches, and in the winter we did like a cooler of soups and stuff. And that business very quickly was making good money. Plus, we started picking up all the catering from the industrial areas, all the businesses there. We started picking up their parties and Christmas parties. So we were able to build that business up and sell it to a bigger caterer later on, a really well-known racing car driver, actually. It was funny. And
Hmm.
we then found out, we were talking to the landlords about getting them to take over the lease. And the landlords told us that 5 different people had tried to make a go of that business, including their daughter, who wasn't even paying rent,
Yeah.
but they'd all failed. And that got me thinking, because I was thinking, I think the secret when you want to take over businesses and turn them around is to be open to what the market wants, not go in with a fixed idea
Hmm.
about what you want to do with a business.
What did you sell it for, if you don't mind my asking?
Oh, well, I think we sold it for about 100,000. So we
A
paid like,
hundred thousand. Wow. So you bought it for 10,000. Straight away got 20,000 back from the equipment, and then sold it for 100,000. And just to give some context, in those days, like what could you buy with 100,000? Could you buy a whole house with 100,000?
you just about could have. I think houses were probably about 100,000 at that time, maybe
Wow.
about 200,000 where we wanted to live. We ended up buying in the Leichhardt area, so we ended up paying 250 for a house. So yeah, it
Hmm.
was practically the price of a house,
Wow.
and because we were buying inner city, so
Hmm.
certainly probably could have bought a house outer suburbs for that. And to put it in context, and this is the other thing I think is relevant, is I was at the time I was earning, we'll say, in a corporate job, maybe 30,000 a year. So, I had that place for maybe a year and a half. So I made the equivalent of 3 years' wages or more than that. Sorry, I was making 30,000. Yeah, about 3 years' wages in a year.
Incredible.
Plus, and the other thing was, I remember at the time my husband was making about 100,000. I then ended up going into a corporate job where I was making about 40, 50,000.
Hmm.
And I remember thinking, gosh, I should start another restaurant because, this is really hard work and you're working all the time when you work for a corporate. And the other thing is when you think back, that was in the 80s. It's actually not that people don't make that much more in income now. We were on a combined income of, we'll say, 150,000 as a couple.
Hmm.
And we were able to buy a house for 250, a business for, we'll say 20,000. That really gives you a kind of an idea of how much things have inflated, right?
Hmm.
So people are not earning much more than that now, but that same house is more like 2 to 3 million,
Hmm.
and businesses are usually around, we'll say around 100K from what I'm seeing. But I
Yeah.
think there'd be a lot of businesses you could pick up cheap like that, like I did. You could probably go around now and make an offer to people who just can't make the rents anymore.
That 100,000 pales in comparison with what you did next, though, with the IT boom, the tech boom, right?
Yeah, so we ended up taking the money that we'd made from the business and we bought our first house. And we borrowed like 95% and, we bought a house, and um, it was a house that was almost fully renovated. My husband was actually doing consulting work at that time, and one of us needed to have a full-time job so we could get the mortgage, right, to buy the house. So I went to
Hmm.
work in corporate. And then I ended up doing it again. I ended up flipping another business. Another place went out of business while I was working in Crow's Nest, the area where the business was. And I ended up picking that one up. Well, it was empty when I got it. So it was just had to negotiate the lease. And then I found it's a lot more expensive to start one from scratch than it is to buy one that's already there, because there's a lot of requirements. I had to redo all the floors and the plumbing, and everything had to
Hmm.
have stainless steel. So if you're starting a place from scratch, there's a lot more requirements to set it up and get it
Hmm.
approved for a commercial operation. And then but we ended up selling that one in just 6 months for about 150,000. So it got easier, that time I did it better. And
Hmm.
then I was going to do it again, but I found out that I was having my first baby. So just focused on buying a house and fixing up my house, and started a catering business from home. But I found it really hard because I had a young baby. And then my husband came home one day and he said, look, the company I work for, the two CEOs just hate each other. I reckon we could, and that's another little tip for people going into business. These guys that started the company as 50-50 shareholders. And if you end up, and I've seen so many partnerships go bad. Have you, Adam?
I have, yeah. It's unfortunately very common.
Very common, because everybody has different work ethics and work styles, and different priorities. So anyway, these guys really weren't getting along, and don't really want to say too much. We're on a public platform here, but anyway, my husband came home and he said, I think there's an opportunity for me to organize a management buyout where we could buy one of them out, and I could pretty much be buying myself a job for life. I wouldn't have to go around doing different consulting work anymore. And so we decided we would do it. We would try and we needed to raise $2 million, which was a lot of money at that time.
Wow.
And we ended up pulling in some other investors, and we got the CEO who was staying with the company to lend us a bit. We got the guy who wanted to leave to lend us a bit. And we put this deal together, and we ended up buying 10% of the company. And the CEO he was able to stay in there with like 51%, which is what he wanted. And the other guys that we put together who had some cash to invest, they ended up getting, larger percentages because we didn't have cash to put in. So,
Hmm.
uh, but what I always tell people when I'm looking at doing some kind of a collaborative project with them is that 10% made us multi millionaires. You can have just a small percentage of a
Hmm.
company that you make very successful, and you can still do way better if you have the right team than you could do on your own. And we ended up building that business from about 40 employees at the time up to about 400, and we grew it during the whole tech build up, the tech boom.
Yeah.
And we went through the whole Y2K period, and we were trying to sell it to a bigger corporate company, and the negotiations went on for a while, and then they ended up coming in with a really low offer. And so in the background, we'd been looking at maybe we should do an IPO. We should afloat the company
Hmm.
because there were so many companies in the tech boom who were floating. And we said, okay, let's go with Plan B, and we did an IPO, which was a whole other learning experience in itself.
Hmm.
And it ended up being the most successful tech float in Australia at the time. And so, for anybody who's curious, it was CAS Computers, and we ended up we were for a few weeks we were personally worth like I don't know $100 million, and I was so excited. I'm
100
thinking,
million. Wow.
yeah, well, let's go. We can go and live with in the neighborhood that Oprah lives in, and all these, rich people. And then the tech crash happened. Literally, like I think it was about a month later, the tech crash happened. And although our company wasn't really, we did outsourcing. We used to look after computers for big corporates,
Hmm.
and although we weren't, and like a lot of those companies that didn't really have any real intrinsic value, we had long-term contracts, but our share price got pulled down, like much like what's happening today with a lot of quality shares. When the whole market falls, it pulls everything down with it, right? So,
So
and our
went
wealth is
from
mainly
uh,
shares.
the
Mhm.
shares went from $100 million of value to what?
Ours.
Yeah.
So, I mean, I can't remember. We're talking, it's like 20 years ago now, but I just remember I used to have a spreadsheet because, and to put this in context for you, we were just learning as we went. We just were hanging in there by the seat of our pants trying to understand this level of business. I can remember plenty of times where my husband would say, I don't know if we're up to this, where this business is growing so fast. And we were just hanging in there. And then the other thing was I personally didn't have very much knowledge of money at all. Remember, my parents they didn't even think I should go to university. So
Hmm.
I went and got a marketing degree at TAFE so that I could at least have some understanding of, after my first business, so I could have some understanding of business marketing. And I did the 3 year, adult education. But what I found was I mean, I just set up a very simple spreadsheet. In my corporate job, I used to do a lot of spreadsheet stuff. So I'd set up a spreadsheet and I knew what the shares were worth on the open market, how many shares we had, and that told me what our, kind
Hmm.
of our wealth was overall, our, I guess, gross wealth, right? And then we bought a really nice property and I focused on renovating that. And my husband was running the business. But what we found as a publicly listed company was that you have to keep growing. You have to keep growing your value. Otherwise, the analysts will sort of downgrade your shares. And the
Hmm.
people that are mostly buying your shares are the big institutional investors, right? So you really have to keep them happy. And when I say that, I mean like the big super funds and banks and people who are managing other people's money, right? And
Hmm.
they decide what shares they're going to have in their portfolios. Does that make
Hmm.
sense? Yeah. And so we found that we had to kind of keep acquiring other companies so that we could keep growing, So that's a whole other skill set that
Hmm.
that my husband was having to learn. Um and then we ended up just I was just never seeing him, and we ended up splitting up. And um I went into property investing. So I sold our house that we bought on the proceeds of the float, and we split our assets. We just came to an amicable split because honestly, he had built the company, so I felt that he deserved, the greater share of the wealth.
Is the
And
company
I
still
think that,
around?
funnily enough, the people that were originally going to buy it, the acquisitions manager who was going to buy it, he ended up going and working for Telstra, and they ended up buying it years later for, I don't know, a lot more. And then they did what you were saying. They actually took it apart. They took it off the stock market, privatized it, and divested the assets. So they split it up into what you were saying.
Oh, okay.
Yeah, what
What
they
was the
wanted was we had some big government contracts. So they wanted the government contracts, and then they ended up like selling off a lot of the other contracts.
So it still worked out okay in the end.
Well, yeah, everybody did really well. The CEO, he's gone and built lots of other businesses. We've all built other businesses, and it was such an amazing learning experience. So, if I had it to do over, would I have managed my money much better? Definitely. But the reality is, I didn't know what I was doing, and I've had to learn. I'm always learning about how you manage money. And there's one thing that I've noticed. I meet a lot of women like me who suddenly, after a lot of hard work, create, millions of dollars in wealth. And then we lose our confidence in managing it ourselves. We think maybe somebody else should be managing our money. And that's when we end up bringing in dodgy financial advisors or accountants. And where I got caught out was my accountant, who I trusted, had sold his accounting firm to there was a big financial advisor firm that was going around buying up accounting firms. And so without my realizing what was happening, he transitioned from accountant to financial advisor, but he really wasn't an experienced financial advisor. So he started advising me to do some things which later on really left me cash flow poor. Like he was saying, oh, we've got to prepare for the end of the tax year. So after I was divorced, I invested in a lot of real estate. My strategy was to own some good family homes, have them rented, and that was going to be my long-term wealth. And
which cities were you doing that in? Everywhere?
we're doing it in Drummoyne, Sydney, lot in Castle Hill and the Dural area. So I don't know if you know this, but Castle Hill was a high growth area because they had put in a freeway and it opened up the area. So that's a really great tip for people who are looking at buying into real estate, is look for areas that have future growth capacity. And in fact, Castle Hill area is really booming now. I still live in Castle Hill, and it's really, really expensive to buy here now. But at the time, it was quite reasonable, and a lot more
So this is
reasonable
all
than
pre-GFC, like we're talking early 2000s here.
Yeah. So this was I actually, about 2003, I was doing a lot of my real estate investing, because I remember that was when somebody said to me that I could actually borrow against my houses and use that. And I also still had some shares in the company. And so somebody told me that I could borrow against my shares. I could borrow the equity in the shares and against my houses, and I could buy more houses. So I took $100,000 and I decided to learn how to trade the stock market. And I split my 100,000 between 10 companies that I understood. I started with a list of top performing shares for the year, and it was in like Business Review Weekly, which isn't even around anymore. But there's I'm sure there's other places you can find lists of top performing shares. And then I identified 10 companies that I understood what they did, that were doing well, that had good capacity for future growth, and I invested in that. And then I actually kind of sort of learned how to do a few more advanced strategies like options trading, and sold some of mine at a profit, sold some at a loss. But because I had it distributed evenly, it was fairly safe. And then I rode a really nice, financial boom between 2003 and 2007. So I was actually doing really well in the stock market, and then I was reinvesting that money in real estate. So it was actually a really good business, because I didn't have to pay a lot of tax, because my real estate assets were, there was a lot of expenses there and stuff, and I could prepay the mortgages. And then money I was making on the stock market, I just had to be really careful of my record keeping, because there's a lot of record keeping, that kind of thing. And so I relied very heavily on my accountant, because I had all this money that I was moving around. And then he said to me, I think it was about 2007 or 2006, he said, look, the government is giving this really nice tax advantage if you put a whole bunch of money. I think it was about $1 million they wanted us to put into super, up to $1 million. And so I actually thought, well, why do I need super? I'm still pretty young, and I've got all these houses. So, but I took his advice, and I put a whole bunch of money into super, and then my brother asked me if I could lend him become the lead investor on a float he was going to do for his business. So I put a bunch of money into his business. And then my accountant also advised me to put a whole bunch of money into some leveraged funds, which at the time I had actually pulled all my money out of the stock market because I felt that the market was really high and had never been at these levels. And maybe it was a good time to just take my profits and rest. So I'd actually pulled all my money out, which I can remember the guy who used to manage my margin lending, he called me a few weeks later and said, how did you know to pull your money out? He said, we're doing 1,000 margin calls a week.
So just before the GFC hits, you've got heaps of property, you've got heaps of, well, you got rid of your shares, but you're in a leveraged fund, which obviously is like ultimate margin lending, I suppose. How many properties do you reckon you would have had at that time?
I think I had about $10 million worth of property.
$10 million is probably well.
We'll say about 10. I had some commercial and some residential, and I had some acreages, and yeah.
So then what happens next?
That property probably be worth about 100 million now. So
100
because
million.
Or we'll say 60 to 100, yeah, because it was really good property. And anyway, so do I kick myself? Yes, I do sometimes, but well, yeah, I didn't know what I didn't know, right? And so then, and then he took me into buying into this leveraged fund, which turned out it really wasn't a good product for somebody like me because I didn't have a lot of income coming in. I had more investment, income. So whereas those kind of, some of those investments are designed for people who are making a lot of income, paying a lot of tax, and can sit on something like that, and it doesn't really cost them that much in the overall picture. So I ended up going to the bank and saying, should I keep this fund? And they said, now with the market tanking, because the whole market crashed, and they said it's really hard to see these recovering, these funds, over the short term. So I kind of stopped trading altogether. And then anyway, I ended up having to sell a lot of I chose to sell my properties because I didn't have the cash to sustain a long-term pullback. And I put my cash in. I mean, in hindsight, maybe if I'd known more, and I now didn't trust my accountant because he put me in some bad investments. And I had a tax advisor, but he'd taken a year off, so I couldn't go and see him. And so I went into fear, and I chose to sell my properties rather than go bankrupt, which a lot of people did go bankrupt in 2007.
What prompted you needing to sell? Because if you've invested in a leveraged fund with equity, you could just liquidate that. But was it you couldn't service the loans?
I liquidated it because it was costing me like $250,000 a year to keep that thing going. So then I honestly can't remember because I was really in panic mode. I was in, the market collapsed, and what was happening in the area that I was in, it was a high growth area. So we were competing with new properties that were suddenly coming on the rental market. So I had all these older properties for rent, and I was afraid that I'd get stuck with a whole bunch of mortgages and no tenants. So I just chose to liquidate while the market was still pretty good. And then I still ended up with a few $1 million, which I then, I just kind of tried different things. I tried different businesses. I invested in a few different businesses. And anyway, I got into speaking. I was actually, I wanted to write a book. I'd always wanted to write a book. And I didn't know, but just before I kind of go on to the next thing, one thing I thought was really interesting was that my ex-husband, who I'm still very close with, we're like best friends, he's also invested and taken his skill set and invested in a lot of businesses. And he's had equally bad luck as I have had with investing with other people and going into business with other people. And I think we've both gone in with this optimism because we were so lucky with our first team. Our first team worked so beautifully together, and we all benefit out of it. We keep thinking that we're going to find this great relationship with others, and unfortunately it's rare. So we've ended up partnering with a lot of people who've done terrible things to us. We've lost. I got cancer, and I had a really successful business. I started a speakers agency. I started working with a lot of speakers and helping them with their books. I always wanted to write a book. I wrote a book. Everybody kept asking me, how did I get the book written? And I knew a lot of speakers because I was doing speaker training, and I ended up starting a speakers agency with a partner. And we built it up into a really successful business. And I was diagnosed with cancer. And while I was going through my cancer treatments, I'd uncovered that she had a fraud going and she was stealing most of the money out of the business. So
Oh,
um,
wow.
unfortunately, the money was gone, and the lawyers were like, it's not even worth pursuing. First question they would ask is, does she have a house? And I said no, and they said, look, just move on. So,
Mm.
I mean, that's probably the worst one, was having somebody steal your business while you're going through cancer treatments. That's pretty awful.
Wow, that's crazy. That's crazy.
And it's just really sad that unfortunately so many people want a quick hit now. They want to steal the money out of the business, or rip off their partner, rather than be in it for the long haul and make it
Mm.
work, even if it's, and sadly that's been my experience of not only myself, but a lot of the people I know, a lot of people I work with, because I work with a lot of high net wealth individuals now.
Mm.
And anyway, so now I have a quite successful business helping people write their books, and I run retreats, and we all get together and they get to mastermind, and that's really fun. I really like that as a business.
Yeah,
So
you're able to share all the experience. And speaking of which, you also had the experience with crypto as well.
yes, so I had a client who was a big crypto educator, and he convinced me that crypto was, the future. And so I did actually invest. I had some money, and I invested a big chunk in crypto
Mm.
when it was, say, in Bitcoin, a lot of Bitcoin and Ethereum, when they were about, actually mostly Bitcoin. And I think I bought in around 8,000 US, and it went
Mm.
up to, gosh, what did it get up to? About 40,000 US. And I started to get quite, I looked at it one day and I went, maybe I should get serious about this. I've just parked it and it was doing really well. So then after years of living that super fund, just sitting there in cash, because it was self-managed, I invested most of my super fund into it as well. And
Mm.
right on, and that was like just a few months ago. And so the whole market, I mean, my super fund literally doubled in 6 weeks, and then the
Wow.
market crashed. So,
Wow. That's a crazy
but
wave.
we don't know what the future is. I mean, there's a chance that could all recover. So there is a chance, but unfortunately, what's been happening in the crypto market is it's still a small enough market that it can be easily manipulated by people who have a lot of money. And I'm not a financial advisor, and I'm clearly not, the person to ask how to keep your money when you've made millions. I'm the person to ask you how to make millions, but um, the lesson that I've learned, I think, would be, you want to work with a really big market like the US market, which is fairly stable and has market makers, and learn how to trade something that has a maximum, a quantifiable loss, like options trading, for instance, where you put a position down to lock in and be able to buy a share at a certain price or sell a share at a certain price.
Mm.
And that's premium. You can only lose that premium. So let's just say you had to put down 10% to be
Mm.
able to buy at today's prices in the future. Then you can only lose that deposit that you've put down, but your upside it can be exponential. It's
Yeah.
pretty much unlimited. So that I would say is probably worth learning. And but most people lose their money in options, and the reason is because they don't really know what they're doing. And
Mm.
the other thing is, a lot of people buy options as insurance against their long positions. So
Mm.
a lot of people use options as a hedge. So that's
Mm.
why they expect to lose their money. That makes sense.
You must have a very good temperament, because the waves that you're riding are just absolutely massive.
I have a very optimistic personality, and I have a very I'm very open to risk, which a lot of people are incredibly risk averse, and probably should be. But I would say now, learning everything I've learned, doing everything I've done, when with my next fortune, which I'm on my way to making, I'm going to invest it in a safer strategy, and the one that my mom's been using for years, that she kept saying to me, I don't like all this lending you're doing. I don't see why you need to borrow all this money.
Mm.
Um, what she does is she buys pop in that nice family homes in areas where people always want to live, and she makes them nice, and then puts families in and gives them a little bit lower rent than the rest of the street, and they
Mm.
stay for years. And it's a nice, safe, long-term wealth strategy. And you buy in areas that have good capital gain. You didn't get to get a word in, but
No, I've enjoyed that. Thank you.
You wanted to hear my stories.
Yeah, I think your stories are fascinating. They're the most incredible stories because you keep getting up and trying different things and you just do extremely well and it goes down. You don't seem to get demoralized. You just get back on the horse and run it up again. I mean, you've probably made a fortune 2 or 3 times in your life, you know?
I have had an extraordinary life. And the funny thing was that when I started writing my first book, I was introduced to some really amazing people in the book world. And one of them was Eckhart Tolle's literary agent. He had gotten Eckhart Tolle on Oprah. And so he said to me, "You've got a great story. Let's get your book written and get you on Oprah." And they actually were gearing me up to put me on Oprah. And I felt so uncomfortable because I didn't think I was doing anything extraordinary. That was when I was doing the houses and the stock market. You know, I was literally putting my kids on the bus in the morning, trading the market, and making millions a year. And and I just didn't think, I thought, who would want to hear my story? Like, I'm not doing anything extraordinary. But then once I actually lost that wealth and I had to recreate it, I started to realize that what I had done was incredibly extraordinary. And it's when you're having to redo it, you think, gosh, it gets harder each time because you're older. You know, you don't have the energy and you don't have the appetite for risk, right, that you had. So, but the thing that gets easier though, and I think, because I work with a lot of people on their millionaire mindset, I'm kind of, I have to work on my clients. When clients want to work with me on creating $1 million business or, getting a book that's going to help them bring millions into their business, we often have to work on their imposter syndrome and their mindset. And what I find is if you've made millions, you know it's possible. So that's a barrier you don't have to overcome. Whereas a lot of people have to overcome that it could even be possible for them. So lovely to see you, and I'll have to go, but let's connect again soon. And if anybody wants to learn more about the Millionaire Mindset, I do have a free training program and a podcast called How to Be a Millionaire, and it's on you can find it on the podcast circuit. It's on all the different podcast sites, but also my website, Millionaires Academy. So and it's really just where I get together with other people who've had, crazy experiences like me. Like I interviewed you yesterday, and we just talk about what do you need to know if you're on the track to creating a high net wealth, right?
Sure. Yeah. Thank you very much for coming, Cydney.
Thanks, Adam. Great to see you.